Very good morning, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to live trading session on Nifty and Bank Nifty using Bookmap, using order flow tools. A standard disclaimer here, right? So whatever we are discussing here is only purely for educational purpose. The whole idea is to learn about Bookmap and how to use the Bookmap tools and how to trade using Bookmap, right? Whatever we are discussing is not an investment advice or something like that. So that's a standard disclaimer though. And in today's session, what we are going to discuss is what is Bookmap and how to understand the volume activity using Bookmap. And of course, trading using Bookmap, that is the ultimate thing that we're going to talk about that. And some of the important principles about order flow, like what is initiative drive and order absorption, and how we can visualize using Bookmap tools. And from a beginner point of view, how a beginner can identify a potential trade on a Bookmap. And trading instruments, particularly Nifty or Bank Nifty or Reliance. So how to look into those information, how to read those information. That is what primarily we're going to discuss in today's topic. So if you ask me what is a Bookmap is all about, see, Bookmap is a visualization tool to visualize volume activity which is happening right now in the markets. Generally, we can classify volume activity into two categories. One is aggressive activity, aggressive traders who send market orders, and then passive traders. Passive traders are the one who supply liquidity to the markets, who send limit orders. So Bookmap is a tool to visualize both aggressive activity. At the same time, we can visualize passive activity. We'll get a holistic picture about what is actually happening in the market at a very microscopic level. Because if you are a short-term trader or if you're a pure intraday trader or a scalper, then we need better information, better volume information about the markets. Maybe if you look into the traditional charts, right? Traditional charts also shows volume, but it doesn't bifurcates what buyers are doing and what sellers are doing. Who is more aggressive? Whether buyers are more aggressive or sellers are more aggressive. But if you are using Bookmap, you try to understand the interaction between buyers and sellers. Who is more intensive? So Bookmap helps primarily the scalpers and intraday traders who is looking for very, very short-term decisions, who want to live by the minute, who want to live by the seconds. So means you want to enter and then you want to exit within next 10 minutes, or you want to enter and exit within a couple of seconds. Bookmap is one of the finest tool to keep it in your trading arsenal. It reveals the microscopic details about the market structure. And of course, it helps you to build the market context in real time. When I say the market context, the word market context means what buyers are doing, what sellers are doing, who is doing a good job, whether buyers are doing a good job, or is there any exhaustion is happening, or absorption is happening, or buyers are driving the markets. Maybe I'll show you the Bookmap tool over here. This is the current Bookmap tool which is running at this point in time. Right? So what you'll be seeing from the Bookmap is you'll be seeing in the form of bubbles. So what the bubble shows here is the bubble shows the volume activity. Of course, we can bifurcate the volume into two categories, buyer volume and the seller volume. Whenever the buyers are hitting the offer or the ask price, you'll be seeing in green color bubbles. Bigger the bubbles, bigger the volume is getting traded at that level. So the time frame, there is no specific time frame over here. What we are using is a tick level data. So means every 1 second once we will be getting one information. I mean, it could be either buyer activity or a seller activity, depends upon what is happening. I can zoom it to any kind of precision levels. When it comes to Indian markets, we get 1 second consolidated interval data. Every second only we will get one information. That is what the current data feed limitation is all about. So here we can see the bubble activity. I can zoom it to a very closer extent. I can see at each and every minute, every second, what is the activity is happening, what the buyers are doing or what the sellers are doing. Relatively, by looking into the bubbles, I can see where the volume activity is biggest. So here I am seeing a bigger volume activity, means it's a relatively a bigger volume. Right, so look at that. These are small volume activity. Nothing much, more of a consolidation is what it is happening over here. So when there is a big volume activity is happening, that means a big buyer is buying from the opposite seller. Buyer is the one who is initiating the markets. So who is aggressive here? The buyer is aggressive. Buyer is sending a market order. So who is on the opposite side? Opposite side is more of a passive trader. A seller is a passive trader over here. Right. So this is in terms of bubbles. If I compress the activity, I can able to see what is the overall activity happen for that day. Right, the bubbles will get consolidated, and you can see where the consolidated activity is getting bigger. Let me show you the entire throughout the day action. Throughout the day, what happened is like market started coming on the downside, but it was hitting the low around 16,970 levels. From there, it started pulling back up. That is what it is happening over here. Now, what happened here is like, if you seen overall, if you seen only this picture from 10:30 to 11:15, you could have been able to see like buyers are the one who is more in control. There are many places buyers went very aggressive. Look at this place, this zone. The buyers very well dominated over here. Right, but if I look from a holistic point of view, again, I am able to see from 10:45 also a lot of big buyers, they started showed up. So big buyers started showing up from 10:35 onwards. A lot of big volume activity happened. Again, more kind of buyers are the one who's a driving force since 10:35 onwards. Right, but if you look from the start of the day, you could see a completely different picture. Slightly a higher time frame. Slightly, if you go to a higher time frame, means right from the start of the day, if you're looking into that, you can see a lot of sellers are the one who aggressively started pushing down more big blocks of red color bubbles that you would be able to see it over here. Now you might wonder how the bubbles are getting plotted. How do we know that whether it's a buyer volume or a seller volume? So that is a way to identify. So whenever you can see the two lines over here, the red and the dotted, the dashed, the red and green lines, they're nothing but where the recent bid and ask is getting traded. If these are resting orders, you can see that the wide is sometimes it is widening, sometimes it is narrowing down. I want you to focus on the dashed lines, the dashed green and red color lines. It keeps on oscillating. So that shows the nearest top bid and top ask. Whenever the price is hitting the ask, you can see that the price is hitting the ask, means buyers are coming and buying, and sellers are hitting the bid. So when sellers are coming and pushing down, you can see that they are hitting the bid level, and buyers are coming up, they are hitting the ask level. So that way we can classify whether it is a buyer activity or a seller activity, who is initiating the most. The top bid and ask level, that which you've seen from your broker terminal or anywhere, they're nothing but pending limit orders. Maybe I'll show you how it looks like. So it looks something like this. So on the broker screen, generally most of the brokers, they provide up to 5 levels. There are very few brokers, they give up to 20 levels. So let me show you the simulation of that activity over here. On the right hand side, what you're seeing is the price chart, a simple candlestick charts. Whereas on the left hand side, what you are seeing is the bid and ask activity. So the bid is nothing but the buyers. So sellers obviously hit the bid and buyers lift the offer. So that is a generic term. Buyers lift the offer in the sense buyers are the aggressive market players. They lift the offer or the ask. Offer is nothing but the ask price. Right. So what Bookmap shows for Indian market is it shows the nearest, the top bid and the top offer is what the Bookmap shows in the form of lines. So that is what we get in the form of lines. So let me go back to the lines here. So these are the lines. So whenever the price is hitting the green line, sellers are the one who is coming and initiating the price. If the price is hitting the red line, that means the buyers are coming and initiating the price action. So when it comes to order flow, the first thing that what we need to know here is like who moves the market first of all at a very fundamental level, right? So what we can see here is like only the market orders, they move the markets, not the limit orders. Now, many people they confuse in the beginning stage like only limit orders they move the markets. Limit orders they don't move the market. They are passive traders. They can control the markets. So that is what market makers do. Market makers what they do is like they give quotes on both the sides. So if you are seeing the quotes, so these are the quotes. If you are seeing on both the sides, these quotes are supplied right from the morning. Once the market started, immediately you will be start seeing the quotes. Till end of the day, you'll be start seeing those quotes. The end of the day, throughout the day, the quotes are more or less guaranteed on a daily basis. No matter what kind of market situation it is. A panic market situation, you'll be finding quotes. Now, who are these quotes provided? If you ask me, majority of them are market makers. Yes, sometimes long-term players also come and give the liquidity, but they don't provide liquidity very often. On a daily basis, right from the morning till the evening, who supply the quotes is the market makers. Market makers could be brokers, they could be high-frequency traders. Mostly they are high-frequency traders. They'll be supplying quotes on both the sides, right? So they are the one who submit limit orders and they make market out of it. So ideally what they do is like they also accumulate, they also do kind of a very passive trading. They are mostly pending orders. Market makers mostly send pending orders only. They'll be waiting for the fill and they'll be mostly negotiating for the fair price. So limit orders always get matched with the market orders only. And of course, one beauty about limit order is like not every limit order has to be exposed. Whatever we are seeing over here, only the tip of the iceberg only means 90% of the orders can be hidden. So means if I'm seeing one order over there or two orders over here, in the back end, remaining 18 orders could be in a hidden mode. Means 90% of the quantity can be in a hidden mode. So what we are seeing in the order book itself could be a tip of the iceberg. Right? When institutions are there, they don't want to reveal themselves. Because if big institutions are coming and participating, right, I could able to see it from the order book, which eventually for privacy purpose, they don't want to showcase that there is a big trading is there. So what institutions will do is like when institutions are coming and participating, they'll be slicing their orders. They'll be cutting their orders into multiple pieces and each and every piece, even they don't reveal the complete piece, they will reveal only 10% of the piece only. So at any given time, we are not going to see that bigger participation in one shot. We are not going to see because it's time sliced or volume sliced. So they might be using different execution algorithms like TWAP algorithms are there, VWAP algorithms are there, fill or kill orders are there, sweeping algorithms are there, stop hunting algorithms are there. So there are various types of algorithms are there. In fact, Bookmap itself famous for one of the algorithm called iceberg detection algorithm, right? So where a bigger order flow can be detected using order flow, using the Bookmap tool. Now, let's try to understand what the market maker does. We know that the quotes are being supplied by the market makers. So they supply liquidity, means they supply on both the sides. They'll be participating on both the sides. The market makers also, they'll be having bias. At times they'll be biased on only on the short side, means they supply more quotes on the sell side compared to less quotes on the buy side. But ideally they supply quotes on both the sides. They have a very good idea about market conditions market sentiment, market volatility. They're not, they're professional players, so they have a very good idea about what is actually happening in the markets. And they are mostly informed traders. Like institutions, they are also very much informed traders. They are passive traders most of the time. Market taker, majority of the time, retail traders are market takers. So they engage with the market makers most of the time. A market order is the one which consumes liquidity. What do I mean by consumes liquidity? Is like if I'm sending a buy market order, I'll be connecting with a sell limit order. So there is a 80% chance that if you're sending a market order, there is a 80% chance that you're going to end up buying from a market maker. Not from your peer trader or somebody, some other retail trader or somebody. There is a 80% chance, not even from an institution, there's an 80% chance that you're going to end up buying from a market maker randomly if you're buying. Let it be an options, let it be anything. So market makers are the driving force. If you're seeing a price action, then market takers are the one who is responsible for that. So market taker can bring the price action. Suddenly, if you're seeing a sudden drop in the markets, big drops in the markets, it can happen relatively because market takers are more aggressive, and maybe the presence of market takers are very less. Liquidity is not supplied much. So in those kind of conditions, the market does a fast price actions. Now, what does the exchange reveals? Let's try to understand that. Market orders, yes, whatever the bubbles that I am seeing in the Bookmap tools, they are nothing but executed market orders. It completely revealed. There is no hidden mode over there, right? So, but limit orders, we can hide 90% of the quantity, we can hide it. Even if you open your trading terminal, before you're sending a limit order, you can hide 90% of your orders can be hidden. Right, so from the order book, the provision is there for institutional purpose, for privacy, to maintain privacy and secrecy, that there is no big participation is there. The privacy mode has been done so that institutions can slice their orders into multiple small packets and execute at various timings. And there is also exchange maintains something called stop loss order book. It's a separate order book. Nobody can see, even high frequency traders, operators. Now nobody can see where the people are keeping their stop loss. Now many people think like my stop loss, somebody is seeing my stop loss. So let me tell you, almost every exchange in the world, they give that privacy. It's completely hidden from everybody. Nobody can see where the other people's stop loss is. Right, there's a common myth is there like somebody is seeing my stop loss, that is why price is coming and hitting my stop loss. That is not true, right? So nobody can see your stop loss, but majority of the time, most of the traders are prone to keep stop loss around round numbers like 17,000. Today also, if you could see that 17,000, that round number would have been get tested. Last 3 days continuously 17,000 has been keep on testing. Because a lot of traders, if they're going long, they might be keeping their stop loss around that round numbers. Maybe most of the traders, they'll be keeping their stop loss at day high, day low, yesterday's high, yesterday's low, or yesterday's high plus 5 points, yesterday's low plus 5 points. So that is why most of the traders, they are getting the feel that my stop loss is getting hunted. But the way the exchange works itself, stop loss orders are not revealed to anybody, not even to the institutional traders and not even to the high frequency traders also. Right? All right, so let's try to understand a concept called initiative drive. So initiative drive is more of an sellers who are taking active control in the market. This is in this example, you can see that the sellers are pushing the price down. On the downside, there is a metric is there, the lower bottom of the charts. There's a metric called cumulative volume delta, CVD. So maybe if I show you from my charts here, you can see that the CVD is like 17,800. Sellers are getting more aggressive for the day. That is what the bigger picture is all about. And moreover, the market itself going like a trending day odds, which I think like maybe more, they might be hitting like 16,950 kind of levels. They might be hitting probably. Today the chances are very high. We might be even testing 16,920 kind of levels also. The reason is, if you look at the CVD has been extremely negative right from the start. So what is CVD? CVD, as I said, it's nothing but cumulative volume delta. A delta is a concept which is nothing but, it's a simple total buyers minus total sellers is what the delta is all about. So what is delta? Let me put a formula over here. The delta is nothing but total buyers minus total sellers. From the Bookmap, you can track how much buyers came in for the day and how much sellers came in for the day. So that is what delta is all about. So delta is total buyers minus total sellers. If the delta is positive, if it is positive, that means buyers are in control. Buyers are in control. Whereas if the delta is negative, that means sellers are in control. It's a traditional order flow, very simple order flow concept. Nothing much complex over there. Are in control. Right. So CVD means cumulative volume delta. Cumulative volume delta. That means overall for that entire day, right from the beginning throughout the day, how the delta is getting behaving. So today's volume, today's CVD numbers are negative. Today's CVD numbers are negative. How much negative? 18,000. What is the number I'm seeing? 18,100. 1,600. Almost 1,81,000 is the negative number. So means if I divide it into lot size, 181,600 divided by 50. 50 is the lot size of Nifty. So 3,632 lots, negative delta. So negative 3,632 lots. Now what does that mean is like throughout the day, there are sellers are more. How much more? 3,632 lots more than the buyer's activity. How much ever the buyer's activity happened, more than that, sellers came in by 3,632 lots at this instant. Of course, we can track the historical activity for the day also. What happened? What is the overall cumulative delta happen? If I zoom into the charts, I could be able to see the overall cumulative volume delta for the day. So throughout the day, how the CVD had got performed, I could be able to sense over that. Let me zoom it out. Let me try to bring the complete activity. You could see that the delta activity is like keep on increasing. Morning it was like something like it started with some 3,000, 4,000 lots in first 10 minutes, and then now continuously the CVD has been overall it has been increasing only. Means increasing on the negative side. So you can see that the CVD it always starts at zero because at the start of the day the cumulative volume delta has to be zero. There is no buyers, no sellers at that when the market is about to start. Now from that point, what has been happened is like the sellers are the one who started press the markets down, and then buyers taken control drastic. A little bit of control came in over there, and once again you can see that the sellers are started coming and pushing the markets down. Clearly, the intensity of the selling is there, right? And it is also having like a trending day odds. This kind of CVD which is crossing like 1,91,000 means there is some sort of a sector-wide selling could be happening. So there's something like if you are regularly monitoring the volume, you'll get to know this is not regular volume. This is not a regular volume, and of course the intensity of the selling pressure is there in the markets. And the pink color line, what you're seeing here is the VWAP levels, right? The VWAP level, if you even keep your cursor over there, it shows like it is a VWAP. So what does that mean? On a trend day, right, the VWAP obviously will not get tested. So VWAP is one level you can always monitor. In fact, if you're an order flow trader, then VWAP you have to give more importance to that. I'll tell you why you have to give more importance to that. Because if you know the underlying principles of auction market theory, I follow the core principles of order flow itself, nothing but an auction market theory only. Let's say if this is my VWAP levels, right? On a regular trading day, the price will be rotating around the VWAP, back and forth, it will keep rotating around, irrespective of whichever the market it is. Now this happens 60 to 65% of the time, right? So this happens 60 to 65% of the time. However, very rarely we're going to encounter a trending day. A trending day, I'll tell you a trending day how it looks like. So probably you'll be seeing an volume activity, the VWAP activity will be moving in one way, whereas price will attempt to come back to the VWAP. They might get closer, but they may not be touching at all. Throughout the day, they'll be keep sliding down. These days are very, very rare, right? Hardly remaining 30 to 35% of the time only, you're going to see that, maybe even lesser than that. There are certain trend days, at least once they will touch, max to max only once they will touch. When you are seeing this kind of price action, this style of price action here, if you are watching this, that means mostly market makers are the one who is controlling the markets. See, they cannot move the price, but they can control the velocity of the price action. Repeatedly, price will be revisited back to the VWAP levels. But something like when the longer time frame players are taking control of the markets, when bigger players usually they don't dominate. Long-term players, institutional players, they don't usually dominate. They'll be either doing accumulation or distribution. But when they are dominating, what you'll be seeing is like the VWAP is one line, you'll be seeing like it'll not be touching at all. Or maybe if it's touching, rarely it touches once, it kisses and then it comes back down. Something like that is what a trending day usually will look like. So that is something which I've been looking into that. I've been looking into the VWAP. So VWAP is not touched yet. We got very close to the VWAP, but still it's not touched yet. So for me, VWAP is one of my reference. At least I know today is not a sideways market day so far. And intensity of the selling volume, the CVD is also accelerating for me. So that means I am just speculating that, okay, what are the possibilities that today it could be a longer time frame players, institutional players coming and selling. Right, there is one simple pattern that you can always identify. If you go to the NSE India portal, let's say I'll go to the NSE India portal. It's very simple. If you see institutional selling pressure is there, I'm seeing it from the order flow. I'm speculating that, okay, maybe what are the chances that today there could be an institutional selling? If there is an institutional selling, they don't sell only one particular sector alone. They'll be sector wide, you'll be seeing a selling activity. You can see that except the VIX, almost every sector is trading negative. Now, what does that mean? Yes, chances of institutional selling odds are already there. Now, these kind of markets, yes, you'll be seeing a long activity also, but the long activity will be very, very small profitability. But shorting opportunity today, since the institutions are selling, right? When institutions are selling, only those days the CVD volume will go extreme. Otherwise, you'll be having a mixed volumes. When VWAP is getting touched repeatedly, when the VWAPs are getting whipsawed, right? You'll be seeing a mixed, that particular day CVD volumes will be very less. Or maybe it will be extreme in the morning, but it will be getting narrowed down to negative in the morning and it get positive in the afternoon. But very few days like this, we will be start seeing the trending day kind of odds. So means this kind of activity doesn't happen very frequently. So it requires monitor. So if you are expecting a trend, I'm expecting a trend day today. I'm expecting a slow and steady slide throughout the day. By looking into the factor, by looking into the CVD, by looking into the CVD graph, and by looking into the various activity. The initiative drive is there on the sell side today. So who is doing the initiative drive? Institutions. How we are confirming that? We are confirming using CVD. We're also confirming using the sector-wide downside price action, and we are also looking into the VWAP pattern also. So 3 important pattern we are looking into that: VWAP, sector-wide selling, and CVD. So 3 things combined together, we are saying that institutional selling is there. When I say institutional selling, I'm not talking about market makers. Market makers are different. They are professional traders. They are high frequency traders. Right? They supply liquidity. Their part is different. Their way of trading is completely different. I'm talking about institutions like mutual funds, FIs, DIs. Those kind of players are coming in, selling in the markets. Right? So that is one thing which is very much evident from the structure over here. So where the selling is getting intensive, I'll tell you, maybe I'll open ICICI Bank charts, because ICICI Bank is what mostly it's been on the pressure. ICICI Bank and HDFC Bank right from the morning. Let me go back and look into the ICICI Bank equity charts. I'll try to load the recent today's one. I'll subscribe. I think it might take a little bit of time to load the data. The amount of data which is there is like a huge data is there. I'll show you how the aggressive selling is happening in the markets, right? So that is why I'm just showing you the ICICI. Let me compress it. Okay, so at least aggressive selling is not there in case of what we have seen is like absorption is what we had seen. So an absorption is another type of activity. You can see that in an absorption activity, it happens exactly opposite. Whenever the price is reaching an extreme, you can see that this is morning activity in Nifty. I'm able to see it like I'm able to see absorption over here. Now what is happening over here is like buyers are pushing up, not once, twice, thrice, 3 times price came very close to 17,080 kind of levels. Every time buyers showed up, reasonably a bigger volume showed up, but despite that, markets are not able to keep going up. Now what does it means is like there is a greater amount of resting orders are there. Some sellers are passively controlling the price action around those levels. Sellers are defending. On the opposite side, they are passive traders. As I said, the passive trader, they cannot bring the price action, but they can defend the price action. They can control the velocity of the price action. If they want to create a resistance, they can create a resistance. If they want to create a support, they can create a support. So from this structure, what I'm seeing here is like buyers are attempting in the morning, 9:15 they attempted, 9:17 they attempted, 9:18 also they are attempted. Initially at the market opening, like buyers are attempting, but some of the markets are getting restricted over there. Like kind of a ceiling effect, some sort of a ceiling they are creating. How? By floating a limit order, a resting order, a huge resting order they are floating. When a huge resting sell order is there, buyers trying to eat and eat and eat and eat, but still remember that there is a room full of food is there. The buyers are keep on eating and eating and eating. Still, there is a lot of food is still left to complete the day. So the buyers are not able to take up because the size of the supply is more. There's more sell side liquidity is there. Passively, sellers created a resistance in the morning, and rest of the day price started coming down. Right, the similar thing is what it is happening in ICICI Bank also. If I look from the structure here, let me do one thing. I'll remove the add-on. You could see here the big buyers are there. A lot of big buyers are here. Again, similar ceiling effect is what it is happening over here. A lot of buyers entered. Look at that. Cumulative delta is positive. Big positive. Big positive. Big buyers came in, but despite that, they are not able to move up. Means it is some sort of an exhaustion. The exhaustion is also nothing but absorption only. Absorption means what? The buyers are getting absorbed. How they're getting absorbed? A huge selling limit order is placed around that level. That is why markets are coming down. So Initially, very big players played. That is why you can see that there's a spike in the activity, spike in the cumulative delta. But later on, price is slowly, steadily coming down. Still, cumulative delta is extremely positive. So there is no aggressive selling would have been there. If you would have been seen the cumulative delta from here, the CVD would have been went down. So means sellers would have been started showing up. But what is the crux here is like the CVD is big positive over here. Very, very big price action happened at the opening. That is where the spike up happened. CVD spiked up heavily. And then a slow and steady selling pressure is what it is getting witnessed. You can see that the small blocks, relatively small blocks compared to the big activity. So that clearly says that there is a clear buyers got into some sort of a trap. The big buyers activity, they got into some sort of a trap. So who is more intelligent over here? The sellers are more intelligent over here. Seller, passive traders, most likely. Sometimes institutions, they create that kind of pressure, not the market makers. Market makers, they generally supply liquidity on both the sides. Sometimes they'll be get biased. I mean, sometimes they'll be supplying more on the buy side. Sometimes they'll try to do more business on the sell side. Depends upon whichever the side the trend is. But they don't move the markets. Without moving the markets, they control it that way by adjusting the bid and ask supply. But Nifty is completely different. The Nifty activity is completely moving in a very intensive way. That is what we had seen. That is what the CVD is also helping us to understand that. So absorption is something like if buyers are showing up, but despite that market is topping out, it is absorption. A huge buying volume is happening. Despite that, it's not able to go up. It is absorption. Or huge selling volume is there, but despite that, markets are not able to move on the downside. That is also one form of an absorption. Means sellers are getting absorbed by the passive buyers. In fact, if you want to use Bookmap, right, you need to have a fair idea about the data types. We can categorize the data type into level 1, level 2, and level 3, tick by tick. Tick by tick is what mostly high frequency traders will be using. Almost all the executed market orders, and also all they are the first one to get to know all the order cancellations or any order has been modified. All the levels they'll be able to see. When it comes to using Bookmap, Bookmap requires up to 20 level of top bid and ask, which is like level 3 data. Right now, few vendors, few brokers are the one who is supplying, and vendors also trying to acquire level 3 data, where you'll be seeing the market order visualization along with limit order visualization also. Limit order, you'll be seeing visualization in the form of bands. Something like you might be seeing in the form of bands here. Something like this. You'll be seeing an the bands, the thicker the bands it is, more liquidity sitting over there, more resting orders are sitting over there. So you'll be able to visualize the resting orders also. But when it comes to Indian market at this point in time, we have only level 1 data. So since there is a level 1 data is the only thing which is available at this point in time, I think TrueData is also trying to acquire level 3 data. I'm sure the work is going on already. You might hear more from them in the near future. So level 1 data is what right now which is used to plot the bubbles. So level 1, what you'll be getting is the top bid and ask. Only one bid or only one ask level only will be able to get. Maybe level 5 data if somebody is having, then definitely they'll be go up to 5 levels. But if you want to properly use Bookmap at 20 level, with the 20 level, one can structurally have the clear-cut visualization of market orders also, limit orders also. Limit orders, we can clearly see where the institutions are supplying those liquidity, right? Where they are creating a resistance, where they are creating an support, or where the iceberg orders are getting floated. So we can get more in-depth idea about how the market itself positioned for the day, how the other players, big traders and professional traders, where they are positioned themselves, or where they want to give more liquidity. If they're giving more liquidity, then how the market will work. We can derive more at a very microscopic level. We can get more into that. As I said, in India, tick one tick data is nothing but it's provided at every 1 second interval only. the true ticks are not provided at this level. We are still, Indian exchanges are using in a legacy methods only. So trading transactions are revealed only every 1 second only. So every 1 second, even there are 4 trades are happening, it will be revealed as one single consolidated trades only. So when it comes to Indian market, 1 tick equal to 1 second. Right? They're not. It's not a true bid and ask, but from a intraday perspective, that is more than enough. We are not high frequency traders, right? We are mostly low frequency traders or medium frequency traders. Even if I'm trading intraday, if I'm scalping intraday also, max to max, I'll be going for 30-40 trades in a day. So for 30-40 trades in a day, 1 second consolidated interval is much more than enough, which gives a rough idea about what the market is doing, right? 98% of the time, what are the volume that we are getting is more or less, it represents a true volume only. So you don't need to bother about all those things. So Bookmap also comes with a lot of add-on indicator. One of the add-on indicator is I'll show you. You can see that the markets are still coming down. If you look at the cumulative volume delta, it's been accelerating. So the accelerating volume is the key for the institutional participation. All right. So generally we don't get to see those days. A very good learning day to understand how a trending day will look like, or how to monitor for a trend day. What are the factors that we have to monitor for a trend day? And there are a couple of add-ons there. Maybe in our upcoming sessions, we'll talk one by one. So a lot of like chase, escape, execute, sweep indicators, absorption indicators, correlation trackers, and much more things are there. And on the extreme left-hand side, you are seeing two things. One is CVP. CVP stands for cumulative volume profile, and the SVP stands for session volume profile. So the CVP shows the volume profile, volume activity to show in a distribution format where the volume is more for the visible space. So if I draw more things on the visible space, the CVP also get adjusted accordingly. You can see that the CVP is getting adjusted. So the CVP, it plots the volume profile only for the visible charts. Visibly, whatever the data is there, only for that data. So let's say if I am zooming out to the most, then my CVP will get adjusted accordingly. You can see that the CVP is getting adjusted accordingly. And based upon the new information. Based on the new information, the CVP is getting adjusted automatically. Right. So what is CVP? So let's try to get some basics about CVP. CVP. I think it is cumulative volume profile, I think. Cumulative volume profile. So it plots volume profile activity for the day. Not for the day, but for the visible space, visible charts. However, SVP stands for session volume profile. It starts plotting the volume profile, how much ever data that you're having in the charts. If you're having last 10 days of data since you subscribed. So it plots the volume activity. So plots volume profile activity since you subscribe to the charts. Subscribed to the charts. It means if I'm having 10 days of activity, I'll get 10 days of volume profile. If your friend is subscribed only for 5 days of activity, your friend will get only 5 days of volume activity. Your friend will be getting only 5 days of volume profile. Right. So let's try to understand what Bank Nifty is doing. So Bank Nifty is also, you can see that now morning we talked about 16,950, and probably I'm also expecting 16,920 to arrive for the day. The reason is very simple. It's a trend day only. Nothing much too much to break into the head. Right. So CVP and VWAP and sector level activity. These three things alone, it gives you the simple context. Now let's go and look into the Bank Nifty activity also. Let's have a fair idea like what Bank Nifty is doing. Bank Nifty. So here you can add the historical data. It goes up to like 7 days. Every day we have to see it as an individual day. The previous day's volume activity doesn't impact today's order flow activity. There might be very few memories will be getting carry forwarded, but generally I prefer to see order flow as a every day as a new day. So means I don't take any references from order flow. I don't take any references from yesterday's level. Most likely I'll be doing a top-down analysis. So from the top-down analysis, I'll derive the levels. So I'll get to know where are the yesterday's low, yesterday's highs are, where is the recent weekly low. In fact, the weekly low is nearing like 16,968, and previous week low was like 16,870 or somewhere around that. What the previous week low is. We've been nearing those levels, so I'm aware about those levels where the higher time frame level. What is happening? I'm very much aware. So what I'll be doing is like I'll be taking a plain candlestick charts or bar chart, and then I'll try to do a top-down analysis. That is the first thing we will be doing. And once we're done with that, we are very much aware about where the weekly highs and lows are, where the daily highs and lows are. Then only we'll coming into the markets to look into the order flow activity. So let me click on subscribe here. So the Bank Nifty data is getting added up. So more or less today, the intensity is itself mostly coming from the banks only. So mostly ICICI Bank and HDFC. I think HDFC Bank morning when I seen HDFC and ICICI are the two things which had created selling pressure. I think some TCS also brought in some sort of a selling pressure in today's session. The intensity of the selling was quite high from these kind of heavyweights. So these are heavyweights, right? ICICI Bank is a heavyweight, HDFC Bank is a heavyweight, TCS is a heavyweight. So if in case if you want to see who is mostly doing the most of the activity, you can go and check out the heat map. So TradingView provides some interesting heat map over there. TradingView heat map. Here you can go back and check the sector level activity of Nifty. Right, so you can get to see that HDFC Bank is the most dominating. HDFC and ICICI Bank, these are the two guys who are pushing the markets down. Of course, ICICI, we had seen from the order flow, what we had seen is like, we had seen at the morning, we had seen some absorption of buyers is what it happened, and sellers are slowly, steadily, they are pushing the price down. CVD is extremely positive. Why? Because of this morning, buyers are got absorbed. Later on, very thin selling pressure is only it's happening. That is the reason, even though activity, buying activity is down, I mean, selling activity is seen overall, cumulative volume is positive. Those are indication that absorption has been happened in the markets. If I look from the Bank Nifty also, so this is Bank Nifty chart, right? This is Bank Nifty chart. You can see that the cumulative volume delta for the day. So you can see a lot of big selling pressures are there, and lot many places the buyers are getting trapped over here. The buyers got trapped over here. The buyers are getting trapped over here. So these are some of the absorption points where big volume, big blocks of volume activity, followed by that level. So you can also, if in case if you want to mark a level, you can go and do a drawing tool, and I think you can bring a horizontal line. You can say like these are the levels that you are monitoring for absorption. So these are the places last time there was an absorption has been seen, absorption of the buyers has been seen. You can use those drawing tools. Couple of drawing tools are here, whereas if you want to bring some text content, I can say like there's a text content over here. I can say like absorption of buyers. So you can also mention that level. What is at what level the buyer absorption has been seen. So why you have to notify those levels is like when if at all the price is coming back to those levels, how the price is behaving next time. So sometimes the stop can be hunted if those if that level is kept on hitting back and again and again and again and again. If at all those levels are getting hit repeatedly, at times we could be able to see some sort of a pressure in the markets. So those levels, if it is repeatedly getting out, or suddenly when the level is breaking out with a huge volume, sometimes even short covering will happen. So absorption level not only monitored for smartness, sometimes they could be weaker hands also. Sometimes during events and all, you can see it very clearly that weaker hands sometimes they'll try to defend for some time, But when that level is getting broken out, a huge short covering or huge liquidation will be happening. Nearing the, if you are monitoring around the event days, you'll get to see that very frequently. But today, overall, who is dominating here when it comes to Bank Nifty? So when it comes to Bank Nifty, I'll tell you who is dominating more. Similarly, if I look into the VWAP levels, of course, this chart doesn't have a VWAP, so I have to go back and add the VWAP. But I can tell you, if you're looking into the VWAP odds, it's very clearly that the sellers are the one. Look at this phase, like sellers' intensity is very huge. In fact, particularly this level, like the seller intensity has been huge. Even though the seller activity is huge here, let me show you, whenever the selling activity is huge, it stops for a limited period and then it starts rotating back. It gives a minimum rotation, right? So some sort of a mini uptrend. So we call this a kind of a trapped selling. Some sort of an absorption is happening over here. Big transaction is happening between sellers and buyers. Kind of a trapped activity. It does some mini rotations. Most of the time, that kind of mini rotations are very common. Whenever a huge volume is getting impacted, suddenly market does a little bit of quick turns. Market does that. If you're repeatedly looking at the market structure, you will get to know how the volume interacts. So you will get more brief idea about volume interactions. So overall, what is the intensity here? The intensity is like, you can see that the red line is coming down. Red line means obviously aggressive sellers are the one who is pushing the markets down, right? And 10:30 onwards, what we had seen. Likewise, there is some small buying activity has been witnessed over here. Now, once again, the intensity of the selling pressure is getting on the downside. So we had seen an absorption over here twice, and then the intensity is like coming on the downside. So I can tell you, like, even Nifty and Bank Nifty also, more or less, the VWAP is not at all getting touched at all. So if in case we want to apply the settings, there is also, you can go and save that as a template. You can go to the chart setting, save it to a file. I'll say like a Nifty activity. I'll put it in a desktop. And I'll go to Bank Nifty. I can apply those same settings. I'll right click and then I'll go to the chart settings. I'll load from the file. I'll select that particular file. So automatically try to bring those similar settings into Bank Nifty as well. So I guess there are a couple of indicators like absorption indicators and sweep indicators are there. Absorption indicator tracks where the absorption is happening. You'll get a fair idea about that. Maybe in the next session, we'll try to, if possible, I think next month I'm doing one more session here. I'll try to talk about this absorption indicator and sweep indicator. Absorption indicator tracks where the absorption is happening and sweep indicator tracks where the initiative drive is happening. So we will try to study more about it and we'll try to bring the principles behind the absorption indicator, sweep indicator, how to trade using these informations. Very elaborately, we will be studying in our upcoming sessions. Right, so yes, our Bookmap provides a beautiful way to visualize those where the place the absorption is happening, where the place the sweeps are getting happening. So you can by visually you can see those information and it will be helpful for you to take decisions on that. The only difference between traditional order flow and Bookmap is like so there are two kinds of order flow is there. The one is called as a footprint charts. That is also we call as an order flow. The only difference is like the Bookmap shows market orders and also pending limit orders. If level 3 data is there, or level 2 or level 3 data is there, you'll be able to see both market orders in the form of bubbles and pending limit orders in the form of heat map. Whereas if you are looking into the order flow or a footprint charts, it shows only the executed market orders, right? And yeah, it doesn't give any interactive idea about it mostly it is time frame based, whereas Bookmap is not time frame based. Bookmap reveals a true activity. It is a more in-depth study about order flow, right? And visualization in case of Bookmap is done via bubbles and heat maps, so that we can have a better picture about other compared to other traders who are using indicators. They just only rely on indicators. They just rely only on mathematics. Here, bubbles and heat maps, we use it to get a real experience about the markets. We rely on experience. Here we rely on screen time. We rely on what is actually happening in the markets rather than living with a theoretical knowledge. A Bookmap also does a beautiful visualization. And in a traditional order flow charts, Bookmap, visualization is done in the form of volume blocks with buyers and seller segregation. Right? That's more about numbers. Here it's all about, here you can easily, instead of numbers, you can visualize in the form of bubbles. I'm sure I can take questions here. More or less, we are coming to the near end of the session. Let me take a couple of questions. I'm sure you might be having a lot of questions here. Go back. Urushi, from where we have to take the questions? Like the questions will be available where? Just trying to check into Bookmap, India, maybe. Is this a place the questions will be posted? Urushi? If somebody could help me out on that, it could be. All right, so I think more or less then we came to the end of the session. I say thank you for coming by and attending the session. So see you in the next time with more interesting learnings about Bookmap and order flow. Thank you.